Hi everyone, I'm April Tan and welcome back to Intelligent Investing Market Talk series. Today, we're taking a deep dive into the Philippine property market to learn about what's going on in offices, residential condos, and REITs. And who better to guide us than David Leechiu, CEO of Leechiu Property Consultants, who just released their Q3 2025 property market report titled Establishing Groundwork for Growth. Thank you, David, for joining us in the show.
Thank you, April, for having me.
Okay. So I read through your report and it shows that office demand reached 966,000 in the
Mhm.
first 9 months. So that's already 88% of last year's total volume. Net demand, 319,000 square meters, or 76% of 2024's level. So that's pretty impressive given all the headwinds. So what's driving the resilience of the office market?
Chaos is driving it, really. What I want to remind people is that the Philippines, for the last 20 years, has become a counter-cyclical market. And what that means is every time the world goes into crisis, more jobs are being created in India and the Philippines. And whereas before, you would have a India-only expansion or a Philippines-only expansion, global companies have already accepted that they need to do a multi-geography solution. So it's always an India, always a Philippines in play. The second driver of that is the remittances that continue to come in. I mean, 25 years ago, remittances were at $5 billion. Today, it's 40, and it's gonna keep growing as the world continues to age. More countries will need Filipino labor. Our young, educated, skilled population will service the world. And you're seeing that happen, and it's just going to keep snowballing. And so, these two sources of funding and wealth creation for the Philippines is what's driving demand for office. And this is despite all the talk about AI and about work from home. Right now, there are more companies saying we more companies that are saying that they are at 4 days instead of 3 days in office. And very soon, it will be 5 days to the office. Maybe the best example I can give you is JP Morgan. JP Morgan is leading the way globally for return to office. So I think by the end of this year, they should be 100% back at office globally.
So even the BPOs here are
And even the BPOs here are moving back to office. The second largest tenant in the Philippines, who I can't name right now, but you can make your guesses, is already 4 days at office, and they think that in time that will go back to full office.
So the BPOs, before kasi what happened was they needed a smaller footprint because of that work from home. So now they're expanding again because
Yeah.
they're being asked to return to work.
Yeah, and that's one of the biggest drivers of office also. So the BPOs and the traditional offices that are saying, let's all go back to work in the office. And so they're taking up more space now because they've hired so many people in the last 3, 4, 5 years, but they haven't gotten office space. And so now they're doing so. And I think that's quite exciting.
I see. So you talked about chaos. And speaking of chaos, a lot of people are still worried about that. So aside from AI that you talked about, so demand is still there, no? Despite AI. I mean, what's the reason why these companies are still hiring more people despite AI? And also, your thoughts about the Keep Call Centers in America Act. Like,
Okay. Okay. So let's talk about the act, the
Keep Call Centers.
Keep Call Centers Act. I think that will not have a meaningful impact on Philippines. In fact, I think it will just make labor scarcer in the US. They're preventing so many people from coming in. and it's making it more difficult for U.S. companies to access labor. And the unintended consequence of that is companies will just offshore more. It's almost impossible to bring back.
The
I
call
mean, there's
centers.
like what is it, 10 million, 12 million jobs offshored all over the world just by US companies. And in order to bring those jobs back to the US, they have to go back to US salaries, assuming there's enough labor and assuming there's enough people that want to do those jobs. And the reality is that nobody wants to do those jobs. Attrition rates in the BPO sector in the US hits as high as 120% a
So
year.
less than a year, they're like out.
In 9 months, they would have cleared through the entire labor pool.
They have to change.
They have to keep changing every 9 months. I mean, and we're talking about thousands of people you have to replace every year. It's crazy. In the Philippines, the attrition rate is only 50%.
Oh, so 2 years.
Yeah.
People
Can
stay
you
for.
imagine if you had a company, if you ran a company with that kind of attrition, 50%, you go a little crazy. But
Yeah.
for the BPO sector, Philippines 50% attrition is wonderful news. It's probably some of the lowest metrics you'll ever see in the world.
And what about AI?
I sit on the IBPAP, which is the IT and BPO sector association in the Philippines. I've been there for quite a while, and I'm the only non-BPO
Board
person there.
member.
This is what keeps me up at night for many nights. And I'm happy to say that while AI is ravaging jobs in the Philippines and certain positions, those people are able to find jobs in other parts of the BPO sector. And because the volume of work coming into the Philippines is quite high, and it's enough to offset the jobs lost in the BPO sector. Next is that AI itself is creating many jobs for Filipinos. One of my clients always says content moderation is a very strong driver for jobs in the Philippines. If you look at example, YouTube prevents violence, abuse, and pornography on YouTube platforms. And there are hundreds, if not thousands, tens of thousands of Filipinos employed just to make sure that none of that content gets online. So that's just one example. The self-driving cars are also another example where you need to teach AI how to drive better and safer. And a large chunk of those mentors and tutors for AI are Filipinos.
Oh, so new jobs are also being created.
Yeah, and I think that will be the case for a long time. So I do think that Philippines and India will continue to benefit from this AI boom in terms of employment.
I see. So I was looking at the data. The overall vacancy rate is at 18% for offices. BGC and Makati have the lowest vacancies, 9% and 10%. Bay Area, 28%. So what level of vacancy would you consider to be healthy for a balanced office market?
I think as soon as it hits 10, 11, 12, those are very healthy vacancies. Now, if you look at BGC at 8, 9%, it in some markets they might think it's high, but the reality is that most of those vacancies are small pockets of space across hundreds of buildings. So the irony in Bonifacio and Makati now is that if you were a 100 square meter tenant, your rent will be cheaper than the guy looking for 10,000 square meters of space. If you're a 100 square meter tenant, you will have 100 options in BGC and 300 options in Makati. If you are a 10,000 square meter tenant, you probably have one or two options in BGC and about 5 or 6 options in Makati.
I see. And what about the other areas? Because I think the other areas, the average would be around like 18% that you
Yeah.
highlighted, like QC or Tigas.
There's still quite a bit of space because the overbuilding really is the problem, and the mismatch between supply and demand. Something that I guess, despite despite how well run some of these companies are, the tendency to create an oversupply imbalance is quite high. So I think people just have to be reminded this crisis of oversupply is just a reminder to respect that oversupply, that supply demand balance. Makati and Bonifacio together is almost 30-40% of total leasing for the entire country. And that's despite traffic, high rent, when they could get cheaper
Yeah,
rent in
yeah.
the Bay or
Why,
Tigas or
why is
QC,
that?
because it offers the best environment for hiring. I mean, a fresh graduate will most likely commute 2 hours each way, so 4 hours a day. They would prefer to do that working in a prime office building in BGC at the environment that BGC offers versus staying in, let's say, Cavite, Laguna, Quezon City, Novaliches, Antipolo, where there's not that kind of energy offered in those communities. And even if there are townships in those locations, the other driver is they want to be away from mom and dad or lolo and lola
So that's what the
or
tenants are
tito.
saying.
Yeah,
That's why they'll pay that rent.
that's why they'll pay that rent, and that environment is really supportive and conducive of community.
I see. Okay. So the rents right now are quite stable, except for BGC, where it's like going up, and Bay Area's going down. So that said, though, we're still seeing a lot of new supply coming in, like for the rest of the year, around 200,000, and then next year another 500,000. Um, is that gonna put a downward pressure on rents next year?
No, not in BGC, not in Makati. In fact, there are a couple. If you look at the number in Makati, it looks high, but a big chunk of that supply is just isolated to two buildings in the very periphery of Makati that apparently companies are not ready to go to. So I think you will find that Makati rents are going to start climbing by middle of next year, which is why I'm telling tenants you got to take advantage of the low rents now in Makati. Bonifacio's exited the oversupply early of this year. And so you're seeing this dramatic rent appreciation in BGC. I think the Bay still has 3 to 5 years to go. Alabang, 3 years max. And Ortigas and QC about 5 more years before they see equilibrium.
So when you say 5 years, for example, in Artigas, where we're at right now, are you saying 5 years of going down or 5 years of just staying where it's at right now?
Staying where it's at. Because the rents should be half of where they are today. Okay? So it's come down by almost half in the last 5 years. But it should be even half of half. So it should be a
So like
quarter.
25.
It should be a quarter of what it was 5 years ago. But landlords are saying, no,
Yeah, they don't need the money.
they don't need the money. I don't want, and they're telling the market they don't want to lease
Yeah.
cheap. Go somewhere else, cheap tenant. And and that's why the rents are still quite high. So the average deal size I mean, the average rents in Ortigas are in the mid 500s to mid 600s. It should not be at those levels, but the landlords choose to
Yeah, keep it there. Yeah.
keep it there and rather keep their space vacant for another 3 years. Okay lang.
And then the Bay Area,
The same thing.
they're still keeping it there.
Yeah, they're still keeping it there. It should be at 250, 300, 400. But why is it at 400, 500, 600? It's because they choose to keep it there. And that's a validation of how resilient the market is. They're not distressed.
I see. Okay, so now let's talk about the residential segment. So in the report, it showed that the number of units being sold is picking up this year, at least compared to last year. So last year, if you look at it, it's trending lower. And it's led by the upper middle income and upscale
Yeah.
segments. So that's between 4 to 12 million. So I guess the good news is the supply is now down to 31 months of
Yes.
sales.
Yes. According
And
to our numbers.
yeah, at least according to your numbers.
Yeah.
So what do you attribute this rebound in the take-ups?
It's it's the lower interest rates, and the banks are like the saying with banks, they give you the umbrella when it's sunny
Oh,
and
yeah,
they
yeah,
take it
yeah,
away
yeah.
from you
So
when
it's
it's
sunny.
raining.
That's why they're
It's
like,
sunny, and so they're flooding, they're giving access to a lot of people for more debt to acquire real estate, and I think that's going to continue
mm,
now that we have shed 1.5 percentage points
yeah, yeah, on
and
the
another one
25, yeah, I
and
think.
another 1% in the next few quarters, which will be dramatic. It will give access to more capital going into real estate.
Or
Now,
yeah, or is it
some
the RFOs that are leased to own? Is that also a factor there?
it's not really a factor because the people who are taking advantage of RFO already have the cash, and they've responded
Mm,
favorably because the developers have said, okay, we've got an oversupply situation. Let's slash sale prices by 30% and we'll give extended terms to buyers.
mm-hmm.
So that combination has released a lot of money from the banks.
Ah, so that's like a closet price cut, right?
It is a price cut, yeah. It's a price cut, and that's why I keep telling people you should take advantage of this. To quote Edward Lee, right? Do not waste a good crisis.
Yeah, yeah. And what about cancellations? Are they still going to be a problem?
Stabilizing. I think it's
Mm-hmm.
a lot less now than it was in 2023 and 2022.
Mm,
So there is a lot more equilibrium right now. There's a lot more stability, and we think that it's going to keep climbing. I do caution the developers to be mindful of the next oversupply because
mm-hmm.
everyone now wants to go into the high end space, to the
Yeah,
luxury
yeah, yeah.
space. But not everyone is going to be appreciated to be in that space.
Yes, that's
Some
true.
people who are, by reputation, in the minds of buyers, are in the mid segment who are now trying to go to the high
Mm-hmm.
end segment, might encounter quite a bit of resistance. That luxury upper end market is dominated heavily by Rockwell, Shangri-La,
Mm,
Ayala, Premier, in that order.
yeah, yeah.
And it's going to be very hard
To
to
penetrate, yeah.
penetrate that position and dislodge one of these three.
I see. So that said, I mean, right now there's a lot of talk about, well, of course, our headlines are all about the fight against corruption and,
Yeah,
um, I guess lifestyle checks. So is that having, I mean, what are your thoughts? Will that have an impact on that luxury segment?
it certainly has translated to a significant drop in transaction volume,
Mm,
but not yet prices. And by
mm,
prices, I mean transacted prices.
mm,
The asking prices have been quite high, and the gap between buyer and seller is quite big. Now
mm,
that gap is coming down, not because transaction prices are coming down, but because asking prices are already coming down. So
mm,
if the market is at 100 as a
mm-hmm,
base, if the market is at 100, the sellers are all at 150.
mm.
The buyers are all at 60,
So they're
70.
not moving. They're just
Yeah, they're
there.
just here and the sellers are there. But now it's a lot closer to 100,
Uh-huh.
both sides. And that's why transaction volumes should be increasing again. This is the phase of realism
Uh-huh. And so that's
where
primary or secondary market?
I think the secondary market much more
Mm-hmm.
than the primary. The primary, I guess, are much slower to react to market.
Mm-hmm.
But to your point, they are also giving these closet discounts
Through the payment
through
terms.
payment terms. Yeah, and I always say so. Shangri-La BGC is the most expensive condo in the Philippines, where the transacted prices are at 700,000 per square,
So
more or
that's
less.
Horizon, or is it?
Horizon
Yeah,
Homes,
okay.
right? And that's 700 to 800,000 pesos per square meter cash, which is a very different number from, let's say, Park Villas, where the transaction values are at 770,000 per square meter, but over a period of
Yeah, yeah,
7 years. So that's a very different number.
So in your report, I mean, I found it interesting that you also highlighted rental yields and borrowing costs. So does that kind of imply that, residential condominiums as an investment isn't attractive?
No, it's a very it's the oversupply is producing lower rents. People are saying, "Oh, I don't want to sell." Here's the other thing. I don't want to sell low, especially now when in certain markets the zonal value is higher than
Yes,
the market.
they adjusted it up,
They
right?
adjusted it upwards at the worst of times.
Yes, yes.
It's like, okay, you want to collect more taxes, you can either get uh, smaller slices of a watermelon or a lot of grapes. And so far, I don't know what these people are thinking, but that alone has deterred a lot of transactions already, because people don't want to take the hit on the higher tax, because yes, on
Yeah.
paper it's 6% of capital gains, but it's 6% of a much 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 higher
Yes,
number.
yes.
So that's painful. So owners are opting to rent. And sometimes after 2 years of vacancy, they said, okay, I'll just rent it at whatever price the tenants want. And so, like in the Bay, a lot of the units there that are studios that used to rent for 30,000
Yeah,
per
yeah, yeah.
square are now renting at 12.
Oh, wow.
And from 12, it's probably going to go to 8,000 a month.
So cheap, huh?
It's so cheap. That's why I'm saying to the public, take advantage of this crisis of these low levels. If you're renting so far away, it's
Yeah.
come to the point where it more than offsets your time.
Yes, yes.
And you can get your life back instead of losing your life to 2 to 3,
Commuting.
4 hours of traffic. Go rent closer to work, and then you'll save more. You'll live better life. You'll probably, hopefully, earn more money that way.
Yeah. Because, yeah, I noticed that. It was kind of interesting, the differential.
Yeah, it's the in places outside of Makati and BGC, I think rents will continue to fall, but that's a very good thing. It will create affordability, and then it will stimulate community development again. So empty buildings should be populated again, because rents are coming down.
I see. And the affordability issue, so you highlighted that, condo prices in Makati, for example, up 38%
Yeah.
since 2019, whereas average family income up 15%. Um, so, what can property developers do to make housing more affordable?
They can't. They can't. They
That's
can
it.
only do so much,
You can only wait, right?
because the driver there is the credit risk profile of the Philippines. So, but here's something to consider, huh? The average loan for the high end in Philippines home mortgage is about 6% now. Okay, now it used to be 7, now it's 6. That's the average U.S. mortgage rate also. Okay? Now, okay, regardless of what's happening today in the US, you can still argue, how can interest rates be the same in the Philippines and in the US?
That is
Okay?
true, yeah.
That's one. But the two big differences would be, I think that's where the similarities end. Okay? But the fact that we are the same interest rate level is kind of mind-boggling. Okay? But where are they different? Number one, the minimum equity required in the US is sometimes as low as 2%,
Yeah, yeah.
even today. Okay, certain deals, the average is probably around 10 to 15%. Okay, in the Philippines, you need to cough out 40%,
Yeah, it's
50%.
huge. Yeah.
It's huge. The second thing is that it doesn't make sense to lock up interest rates long in the Philippines. So you take short-term bets, 2 to 5 year bets. Whereas in Japan or US, you can lock up rates for as much as 30 years
Yes.
fixed, which is insane, which is like free money,
Yeah, yeah.
especially in Japan where interest rates for the home mortgage is like sub 2%, fixed for 30 years,
Yeah.
40 years. It's ridiculous.
Yeah. So maybe here, if the payment terms can be extended further,
It,
then it will become more
that
affordable.
will happen when we are better in the credit risk profile.
Mm-hmm.
So as a MVP did say, and is being quoted heavily about this, the credit ratings are at risk if we do not
That's true.
correct this course. And I'd like to add to that, not that I'm any, but I, but I think we have to keep improving our credit risk profile so that the long-term bonds stay lower,
Yes.
and therefore interest rates on borrowing in real estate will become lower for longer.
Yeah, that they can afford to give longer payment terms. Because
Yeah,
I think right now, what's popular probably would be a 15-year.
yeah,
20 is not so popular, right?
yeah. So maybe if I can just rephrase that, huh? So the government, I mean, the private sector has done all it can to be able to make housing affordable, but the biggest catalyst in change will be improving the credit rating so that the T-bill rates of the Philippines will be lower for longer. And then
Yeah.
translating to mortgage rates being lower for longer.
Yeah. So I guess in practical terms, it means that the government has to control the debt levels. Currently at the 60% plus. It should stop going up and start going down. So, create a little bit more credibility
I,
among,
I, I think
yeah.
I think the I think the fiscal management of 60% is okay. The problem is what to do with the money. And as we have now been reminded, a large chunk of that money has been squandered and wasted
Yeah.
to fund the lavish lifestyles of a lot of crazy people. So if we are able to correct that,
Yeah, yeah.
and a lot of
Yeah,
people are trying so hard, then it will make a dramatic
yeah, yeah.
difference to the fiscal policies and situation of the country.
Yeah. It's a big thing. Yeah. So anyway, that said, based on the positives and negatives discussed about residential condominiums, so what's the outlook for selling prices and rental rates? Have we seen the worst? Is it still going to go down, or it's going to start going up? Or it's same as offices that you said. It's just probably going to stay flat.
Residential rates will continue to stay flat. In the high-end market, because of scarcity, it will probably start climbing again. There's a pause now
Like
because
when you say like high end, like what price point are we talking about?
the premium enclosed villages and
Okay.
premium condos, like for example Valle Verde, Alexandra, One Rojas, Two Rojas. Those kinds of buildings are going to keep doing well. There might be increased vacancies because of all these nepo babies going back home to mom and dad and not living the life anymore, so they're vacating spaces. Um, but I think that's temporary. Again, all this noise is producing a temporary slowdown in transaction volume, but we think that that's gonna
Eventually
surge
rebound.
again after, I would say, January, Feb.
So next year probably rebound again.
Yeah. I do want to say that let's not forget that the government is still the biggest pump primer in this economy. And while we are investigating all these projects, we cannot also choke the ones that are under construction. So there's got to be a balance between trying to find out where the leaks are with we still have to keep
Yeah,
the projects going, because that is going to stifle economic activity if we just shut the faucet off.
yeah, yeah. That was David Leechiu, CEO of Leechiu Property Consultants. If you found this discussion helpful, don't forget to like this video, subscribe to Intelligent Investing with April Tan, and hit the bell icon so you won't miss our next market update. See you in the next episode. Catch the second part of this property update series in our next episode, so stay tuned.